episode is sponsored by Moomoo, the trading platform built for people who are serious about investing. Moomoo gives you pro-level tools in a clean, easy-to-use app, real-time level 2 data, Morningstar research, AI-powered market insights, advanced order types, all in one place, completely free to use. And right now, new users can earn up to $1,000 in NVIDIA stock just for funding an account, plus an 8.1% APY on idle cash for 60 days. Use the link in the description to get started. This is a paid sponsorship. Moomoo's 8.1% APY is a limited-time promotional rate for new users, consisting of a 3.35% base rate plus a 4.75% booster for 60 days. The NVIDIA stock promotion requires a qualifying deposit and maintaining average assets for 60 days to unlock rewards. Terms and conditions apply. Securities products are offered through Moomoo Financial, member FINRA/SIPC. Investing involves risk, including possible loss of principal. This is not investment advice.
Hey everyone, welcome back. This is Kenny with Marathon Money, and this is the Inside the Ticker series. And today we got Unusual Machine, ticker symbol UMAC. I'm here with the CEO, Dr. Allan Evans, and we're glad we want to get into it. Definitely with the changes they made last year and the success they had in the stock market, and also the success they had in their operation and business. So, Dr. Allan, I want you to get started. Tell me, so far, how did last year start from you guys with the change?
Oh man. So I think you got to go back to the IPO 2 years ago, Valentine's Day, lovely. When we IPO'd, we set out with the idea that this notion that if the US is going to require US made drones, they're going to require US made drone parts. So we really started right out of the gate sort of saying, hey, parts are going to ultimately be our business. And then if you look, we have this really great retail channel, Rotor Riot, we sell these parts, we do this stuff. And we said, okay, if we start to build our own parts, we at least know where we can sell them. So we could make 1,000 or 5,000 and we didn't have to speculate on where the first volumes would go. And then about a year ago, we started getting parts on the Blue framework, a little more than a year ago, which is the Department of Defense approved parts list. And people started buying them in large numbers. Like our first flight controller that we did, right when it was done, we sold almost 10,000 of them. And we were, new coming out, we're like 10,000. I don't know, we were panicky. And then they were gone in under a month. And we're like, okay, the concept works. And so really what happens then is we kept doing product development and building. And last summer, the government shutdown ended. Really, the government budgetary shutdown and the delay on the budget and continuing resolution delayed the military part of the drone market till late last summer. And then once the market turned on, that and the drone dominance program and some of the other stuff that have really come online have now just created huge amounts of demand that we just keep building into. And so that trigger, about 9 months ago started our scaling corner because our customers were all getting tons of orders and really trying to build drones. And now, we're just trying to keep up, and we're doing a very bad job going as fast as we can of keeping up with demand. Oh, you're muted. Yeah.
I apologize. That's amazing. What's awesome is because when I look at your IPO from Valentine's Day from 2 years ago, your share price was at $4, right? When you guys IPO, you guys have managed to stay above that and have done really well. That's very difficult for any company that's IPOing. Most times when a company IPOs, they tend to tank. Was there some?
Oh, we traded down. We went down to $1.50 a share for a while there.
Yeah.
I invested in the round. We did it at $1.50 a share. And Red Cat had owned 49% of it when we IPO'd because we looked kind of like a spin out, and we had them bought out. And so that first year, there was a lot of, I would say, uncertainty and risk around the company. We were not well capitalized. We had to clean up some of the derivative stuff. We were able to go in and do all that without destroying shareholder value.
Yeah, so, and that's what I realized is when I look back at, and even though, because a lot of companies, they don't have that leadership style or recognition to see that. So I was wondering what you guys did different, because I know you guys went down, then you guys are back up. You guys didn't have to dilute or do anything or reverse shares. So what was the thinking behind that as the leader?
Well, first, solid CFO. So shout out to Brian Hoff. He's, he had to do a lot of the work and contribute a lot of the ideas. How it all got done is we have relationships and trust with key investors, right? All the way up and down. We try to be transparent. We try to say what we're going to do And so we were able to get investors, including Red Cat, which owned a lot of the stock, to sort of buy into what we were doing. We hit our execution milestones and everybody sort of went along with it, seeing the long-term opportunity over like a quick flip or a micro-cap structured deal. So, I really think it's that approach that we take where we're like, hey, we're trying to do it this way. If everybody participates, here's how you get the win in the longer term and like a real meaningful financial win for everybody. And we were able to deliver on that for those investors who sort of trusted us and bought into what I think is a much cleaner approach to, building the company from a cap tables perspective to where we're at today. And if you look today, we're all common stock, right? No derivatives, no controlling interest, no debt, none of the things you'd say, something cute's going on there. So I think everybody was like, okay, with those relationships, if we support what they're doing, we can really build something meaningful. And in doing that, we, have driven value for those early shareholders.
I do want us to like walk through like the pivot of like 2024 retail e-commerce, where I think you was generating revenue of 5.5 million. And now with enterprise and manufacturing, you're doing about 11.2 million. Is that correct?
Yeah. So it wasn't a pivot. It was the plan all the way along.
Okay.
So we said, okay, we have this retail channel and we can sell parts into it. And then we kept making more and more and more parts, but we expected that our enterprise and manufacturing business would be much larger than our retail business. And that was our story from the very beginning. That's what we IPO'd around. And so we, our retail channel is still super important. It's actually a really great sales funnel. So like, let's say you're running Kenny's drone companies.
Yeah.
Right? You're building a drone. You know that you can come to our retail channel and buy US made motors and build your prototypes. And then you can come buy 10,000 of them. And so we get a lot of inbound, a lot of initial purchases where people don't want to call a salesperson and deal with the whole rigmarole. And like, they just want to go buy them and know that they can buy a whole bunch of them if it works. So we see a lot of value in still doing the retail channel and a lot of value in servicing the American customers as well.
I look at like drone, I don't want to be like too blunt, but a lot of people don't like it, like drone warfare. With the war going on, drones is becoming a very hot topic. It's actually been a hot topic for like 2 years now. And you're one of the companies that people really like, that you guys do it really well on the retail side and in the military side, enterprise side. And what do you contribute to like the success of all that? With your leadership's out in the team, your CFO, what else is going on that you guys are putting into this that nobody sees, that is potentially to grow, your revenue and grow more relationships as you guys expand forward?
Yeah. So I think 2 questions here. The first one is like, why do investors like us?
Yeah.
And my guess, why I like us, let's just say, and why I, have a bunch of equity and keep doing it, besides the team's great and the work's fun. In a market like this, where there's a lot of uncertainty, who's going to win? Like DJI, the big company's kicked out, but we don't know who's going to win. And we as a parts vendor sell to everybody. So, what I've said in the old days, and it's still true, we kind of look like an ETF for drones, right? If you're like, I don't want to pick the winner, I kind of want to pick the industry, I'll invest in the parts guys. Why? Because, they kind of sell to everybody, and we do. So I think for a lot of people who look at it, if you don't know which one of the 25 drone dominance companies is going to win, or you don't know, there's a lot of really great drone companies all doing new stuff. And if you don't have a real strong instinct on one of them being the winner, then the parts guy we sell to most of them, right? So then you're like, okay, it doesn't matter who wins. These guys are going to be just fine.
Yeah,
so I think
I like that. I like that. And that's one thing I really, really liked about your company, because it's something that we always said on Marathon Money to the people that have been listening to us since like 2016. You're better off finding the guy that is selling to everybody, because it doesn't matter who wins that game. He's going to sell to everybody. And I think like it's no different from NVIDIA. That's how I kind of see you guys. You know what I mean? They're not just trying to, you know what I mean? They're selling to all the major corporations. And then
Yeah, they're a parts
distributors and
vendor for
everything.
that.
Yeah.
Exactly. And so we see it the same way. There aren't a lot of other parts vendors in our categories. So the other thing is there's just not the same level of domestic competition. And that just happened to be because what we do is it's the boring part, right?
So,
like drones are awesome. The
yeah,
parts, like who's all like Goodyear's great. They're like, no, look at that Tesla,
yeah.
right? So like we got Goodyear vibes. It's fine.
You're the you know what I mean, I don't want to take it the bad way, and actually as investors you want this to be the good way. You're the boring company. That's
Yeah.
what I always say. You wanna make the most money, follow the company that is just ABC. I make the parts, I sell the parts, and I sell it to everybody. We're not doing specific things where we do it right, we're good at it, and that's it. You know what I mean? So I
Yeah.
always say the boring companies are the ones that usually they win, and they're the most profitable in the long run. But on to that with, you know, what about backlogs? Backlog of signed contracts for Q1, Q2, Q3, Q4. What's the 2026 revenue look like locked in for visibility?
Oh no, I can't talk about that. I mean, and I also don't like the word backlog. Like backlog implies we're not delivering on time.
Yeah.
We definitely deliver on time. So it's more like revenue under contract. But
Yeah.
remember, we're a parts vendor. So that's not a big part of our blend.
Okay.
What we get is these forecasts that are non-binding from customers. And I'll give you a great example. Drone Dominance Phase 2 is expected to be announced in September.
Okay.
They're going to pick 10 companies to build 60,000 drones.
Sheesh.
It's about, if we do all the parts that we do, it'd be about $1,000 a drone. It'd be about a $60 million opportunity.
Man.
Right. Like, let's just take that, for example. How are any of those companies going to place orders right now when they don't even know when they would go compete to see if they won? So 100%. They don't know, and they can't really place orders till like September when they find out if they won or not. But we're already starting to build inventory and be ready to supply all those customers. So we know that just from Drone Dominance Phase 2, there is a $60 million revenue potential opportunity, but we won't get orders till September for it. But we have to build now and be ready to meet the demand, or we won't be able to let our customers meet the end timing demand.
Because you're the parts guy, so the demand is going to come your way.
Correct, especially for the only ones in stock at scale when they have to use U.S. parts. It's great, but they don't know if they've won, so how can they sign a binding PO for $20 million? For a lot of these companies, they're small, and that would be, if they've won, they can do it. If they haven't, then they got to be much more careful about what they do. And we understand and appreciate that. So you'd say, okay, what is the programmatic revenue opportunity? Just drone dominance just this year for us is a $90 million opportunity. Are we going to realize the whole thing? No. Right? You don't ever get 100% of the pie, but no. I think we'll do pretty good.
You're going to get a good chunk of the pie.
I think we'll do pretty good.
Okay. So can I make a little bit of the assumption, one of the many reasons that you raised $157.8 million in 2025 and then another $150 million in March 2026, which totaling $307 million in 12 months. Is that one of the reasons because you guys are preparing for that type of growth, and that's where some of the capital is going to get deployed?
Yeah, let's just use another example. Drone Dominance, the program, requires about $250 million worth of parts in 2027. The only way for us to have the raw material to make that is to order it, and we have to order at least 6 months in advance because supply chains are long. And as you order more and more stuff, they get even more
long.
So just to have the material, not the warehousing, not the staff, not the CapEx, not the anything, to just meet the demand for Drone Dominance in just 2027, I have to place about $125 million worth of parts orders by about August.
Man, dude, I'm already loving what I hear because I can tell the reason why is because as simple as like you're perfect. It's like the rare find. You know what I mean? You're the parts guy. You're going to get a good chunk you know, I mean, you don't want to oversell yourself, but you're going to get some of that business that's coming from the drone dominance, you know. And, you know, also, you know, on my information, you know, you ended the 2025 year with 103 million in cash. At your current burn rate, how long will the 150 million raise in March last? 12 months, 24 months, 36 months? If you know, you
I mean, so if you look at our finances, we register a gap loss, but only because of equity comp.
Yeah.
We have never had a quarter where we've spent more than $1 million.
That's amazing.
So $150 million will get us till I'm dead from old age. I mean, it's a little bit tongue in cheek, right? We have to spend some money to accelerate and stuff. But I think another reason why people really like us is we're not a venture company. We don't look like VC money to scale at all speeds. We're a growth company where if you look, Amazon lost money but was cash flow positive for 20 years till they turned a profit because they kept reinvesting in growth. Uber the same way for like 10 years where they kept reinvesting in growth. You know, they were cash flow positive, but equity comp is why they registered a loss. Our goal is to sit in that same sweet spot. And if we're growing 50% year over year, do you really want us to turn a profit and kick it off, or do you want us to keep growing?
No, we want you to keep growing 100%.
Yeah. So we see a real big market opportunity here, but we wanted to have enough working capital in the bank to place the orders later this year to just meet the minimum demand next year and not run out of capital, because if you can't pay your vendors or whatever, the whole hardware system jams up.
100%.
So we took the opportunity to raise money to just be ready for what we have to do over the next 6 months to be in a position to be the big winners next year as a parts vendor. And that's actually one of the reasons why the bigger you get, the better your raw material pricing, the better your systems, the cheaper your parts, the better your parts because of quality, the more people that want to buy your parts. So the bigger you get, right? It's a virtuous cycle, hardware is. And so the further out in front we get and the more we can use capital to really drive scale, the more of the market we win. Like most of these companies only end up ever being at best duopolies, right? There's only two winners. There's only Uber and Lyft, even though there were 30 rideshare companies. And so we're capitalized to be one of the winners in that duopoly. And like you just don't get displaced once you're at scale because the economics of being at scale make it really hard for anyone else to enter. And this market wouldn't even be available unless the US government banned Chinese parts and actually all foreign parts. So we have this like moment in time where this billions of dollars market was opened up, where now if we can be the first ones on the virtuous cycle, that positive feedback loop just lets us fill the vacuum. And why wouldn't you resource that to fill the vacuum? And that's where the people putting in the money see what we're doing. They see us starting to fill this vacuum. They toured the motor factory. They see us making 20,000 motors a month and adding staff and adding shifts because they can feel the energy of the pull. And they're like, yeah, okay, we get you need to buy more raw material. We would like some stock because this is going to work.
Yeah.
And, you know, you don't raise that much money at an 8% discount with no warrants, no overhead, nothing from large small cap institutional investors. You know, that's a really good financing. It's not a 25% discount or anything else, which would signal more corporate weakness and more like arbitrage from the large funds. They're like, we don't even need the arbitrage. You're going to take the money and blow this thing out.
Man, you know, your gross margin went from 24% quarter one 2025 to quarter four 2025, 36% gross margin. It went up. You know, I feel like this is kind of redundant when I'm going to ask, you know, is that sustainable? But the way you guys are moving and operating, we're only spending $1 million a month. I feel like that's extremely sustainable for you guys. Is that just me being too happy?
A little bit. The margins are going to dip in the first couple quarters because as you bring in a whole bunch of new hourly workers that build stuff, they all hit margin.
Yeah.
They're not in ops. And so, you know, you're just not as good at a job when you just started and the processes aren't as good. So I always figured we'd see a substantial margin dip into maybe the low to mid 20s in Q1, Q2 as we really scale. And then, but long term, we expect to get back to 40% gross margin. And we set our material margin so we can get there. So we're not structurally out of whack. And so you'd figure, okay, we're going to go through this dip, almost like an accelerant. We're hitting the ramp. And then we just got to hit the jump after we hit the ramp,
What is your real competitive moat?
Scale.
Say again?
Scale.
That's your real competitive moat right now. That's what's separating you from the other drone manufacturers out there.
Yeah, scale. No, we're not competing with drone manufacturers.
Yeah.
Other drone. So there are a couple. Scale is the first thing is we're domestic. We manufacture in Orlando. Correct. And so there's a requirement from the FCC. There's a legislative block on all foreign drones and drone parts.
Correct.
So we got started early and now we're at scale in the US. So then in the US market, it's scale, and that scale is empowered by money.
So
right? Because
the curve. That's what you're saying.
With where we're resourced, I think we're going to be one of the two duopoly winners at the end of the day. I don't know who in the other categories are going to win the other ones, but
you know your space and you have a great chance of winning.
Yeah, because to even make motors, let's say, just a motor factory, just for drone dominance, you would need about $40 million in cash you can put into the supply chain, and you'd have to put it to work by August. So if you were going to build a US motor company to compete with us for just that market segment, for just those specific motors, the only way you could even build enough material to deliver to your customers is if you had $40 to $50 million. You had the equipment today and you invested in your supply chain by August. And we just don't see that in the landscape. There's one other company out there, ePropel, that does motors. They're great. Okay. But that's a duopoly. That's us and them. Right? So that leaves us there at the end, and it leaves us, we have the financial resources to compete, where most people, they didn't see the market coming as fast, and so they're not in front of the supply chain in the same way.
Now, what's your two top best products that you see getting off the shelf right now? One for enterprise and military.
So we have a wide mix of everything we sell. The things that, like, we sell some ready to fly drones on the retail shop that are cool. I think the Ladrib frame is our COO's Andrew Camden's frame, and I think that's the first US parts ready to fly we're doing for the retail store. So I think that's pretty cool. And then on the military side, our VP of headsets, who's really been building it, just got in these US made black plastics, matte black plastics. And that'll be for the Fat Shark headset Midnight Edition. And it's just cool. Those are two things that I think the team's doing a really good job of incorporating our ethos and driving things forward into what we're doing.
Yeah. I do want to ask you, what milestones as retail investors, institutional investors that are watching this, what should we be looking out throughout the year that we should really pay attention to, that would make us feel comfortable holding the stock?
So I think there's some, if I step outside of the company, and I'm not me and I don't get to see it every day, I'd say, okay, big talk, but show you can scale revenue, right? And I think from Q3 to Q4, we started to show that. So I'd say, okay, in 40 days or so, you'll see Q1 revenue, and we should continue the scaling function. Because if you look, headcount is sort of a leading indicator of size, give or take. At the end of Q2 last year, we were 20 people. At the end of Q3, 40 people. At the end of Q4, 80 people. And if you look at in Q2, 2-ish million, Q3, a little more, but still 2-ish million. But Q4, then 4 million. And that's the scaling of headcount from 20 to 40 has the revenue impact a quarter delayed. And so I think you'd want to be sure that we still kind of hit that rough trend in Q1. If we do, then you can start to say, okay, let's look at headcount as a leading indicator so I can guess revenues if you want to see where we're going. I think you'll see, we don't announce orders, right? If we don't have to, because our customers are awesome. They can announce themselves and we don't want to steal their glory. I think, maybe purchase orders, maybe what we're doing around batteries, maybe size of the company. But really, you want to see the boring things that show we're hitting our growth segment. And as long as you see that we're doing it and doing it consistently, we're pretty quick to communicate if we don't think it's going to happen. So that's what I'd look for. I'd look at the quarter one results really and say, okay, is what I would expect from quarter four, like quarter three to quarter four, going from the 40 to 80 people, does that manifest in quarter one in terms of revenue and performance? Okay, how many people are they now? Where do I think they're going? Where do I think the drone industry is going? Because we're ultimately impacted by the drone industry itself. So I would say, people regularly ask, as part of that conflict in Iran, the conflict in Iran didn't cause more drones to be bought, but it has caused a lot of interest around counter drone. And our parts are also used in counter drone. So there's this whole new demand spike that we didn't anticipate that's showing up, right? So when we talk to our team or whatever, we're growing as fast as we can. And right now, if I modeled demand, because it's so big, I can just model it as infinity for the next year. And now it's a risk of how fast can we grow.
Before we end, I do want to ask you one question about the drone dominance. Actually, two. First, do you have a favorite to win? You don't have to answer.
No, I honestly have no idea. I never have any idea.
It's always a surprise.
The last round was a surprise. The ones that all came out, it was a surprise. And what's really more interesting is I don't think there's going to be one winner. There's people doing different cool stuff. Mm-hmm. And the drone companies that do stuff, they do cool stuff, right? It's super cool what they end up doing. So I'm just always excited. And I think they're really doing the software and the AI and the swarming and the different configurations of stuff in super neat ways. So pretty excited about all the companies. I think a lot of our customers do different and neat stuff. And I don't know, I like that.
Yeah, when all that happens, when will we be able to see something? When will we be able to see the revenue from that? Would that be like quarter four, quarter one? More likely quarter one, right?
No, they just announced, they started by announcing drone dominance phase one late February. So you wouldn't see any revenue from even phase one, which is smaller, till quarter two.
Of this year or next year?
Of this year, but that'll be small.
Yeah.
And then you'll start to see more meaningful revenues because they require NDAA compliant US supply chains for phase two. That's expected to be in September, but you wouldn't expect deliveries and stuff to really show up till quarter four. So I think you could expect late quarter three, early quarter four, starting to see drone dominance revenues push in.
Results.
In the meantime, we still have a lot of demand from other stuff. So we just use that program as representative of one demand segment because it's very high profile. There's a lot of other demand still that we're busting our butts trying to fulfill.
Is there potential acquisitions in mind? You don't have to tell me names, but anything you have in mind, you're looking out as the leader to widen your moat, to get more stickiness.
Yeah, so the thing we did last year, we acquired Rotor Lab, and we did that and then we injected steroid juice to really grow our motor production really fast. We're looking at doing the same thing for batteries, right? We're going to make battery packs, and you'd figure we'd probably do a smaller acquisition there to also bring in expertise to help with that. And we'd follow the same model we used for motors, and that model worked really well. So I think when you look at that, we're not looking to do these disparate things and then do integration. We have a process and a plan for how we do this, and I think that we'll follow that plan for batteries.
Man, that's amazing. And Allan, I hope I get to talk to you when the drone dominance happens in September.
Well, Kenny, all you got to do is text me and tell me we got to chat, man. It's not that hard.
I know.
Pretty easy to get a hold of.
I'm definitely looking forward. You got me so excited because a lot of the questions and concerns, definitely a lot of people that reached out when I put this that you're coming on the show. In my portfolio, this is what I look for. Boring. Because
we're boring.
Yeah, there's the boring companies that make it the furthest. It's just they're good at what they do. Warren Buffett said it's best. It's people that are good at what they do with great leadership. That's all you really want. And we're definitely looking forward to hearing about you. Appreciate it. Hey, one thing I want to say before we get off, thank you, Dr. Allan, and also thank you for everybody who's listening, watching. I appreciate you. Peace.
So do I. Thanks, guys.